The ability to recognize pattern and following this pattern as it plays out consecutively is one of the key ways to become profitable in trading. Strategies are not just shared without being proven. I want to share with you again how you can take advantage of this strategy, the Bollinger Band, which is the Bollinger Band period 130 deviation 2.0 shift is 0, you apply to close, and the moving average 25 exponential, just as you are seeing, moving average 10 exponential, and my relative strength index, the period is 9, and here are the levels, and then the commodity channel index. All this can be combined with your price action to aid your profitability. I'll be showing you this on crash 1000 and on crash 500. So you will know that these things are pattern, and these patterns are repeated over time. So all you need to do is your ability to study, backtest, practice, get used to how this thing works, and focus on it, and it will improve your trading greatly. Remember, regardless of the time frame, let me use that word in this video, whenever price crosses our middle Bollinger Band here, when price crosses it, it is established that we are beginning a journey of an uptrend. And whenever price is below it, we established that we are in a downtrend. So if you look at this over time, you will see that price has been below it, and most of the time price will go back, retest it, and continue to the downside. And I said for us to validate the cross of this moving average, when price crosses this middle Bollinger Band, which is this, you need to wait. Price will always pull back to it. I've shared this in the video I titled Exposing the Tricks of Trading the Moving Average and Bollinger Band. Price will pull back to it, and then you will need a confirmation. And in this scenario, you can see that here we have two pin bar, that two rejection, and then afterward price pull to the upside. Another easier way you can validate this is for you to carry your trend line and mark this. Price break out of this trend line, and then you could have been in this trade. And you always know that when price is in an uptrend, price will always take liquidity of the upside. What I mean is, this high that was created, price will push up to take this high. And after price take this high, the next thing you should be expecting is your price to come back and give you a new higher low. And then price push up again to take the liquidity of this side. And that is what validates the trend. And afterward, you can see that the movement of price is always established above the middle Bollinger Band. So you can see how this plays out all through. Can you see this? So this thing is pattern that is working. So how do we trade this? When price, you have established that you are in an uptrend, price is above the middle Bollinger Band. So once price push to the upper Bollinger Band, definitely over time price is going to drop. Remember, you are not going to trade against the middle Bollinger Band. So you need to be patient and wait for price to pull back. And price pull back to this middle Bollinger Band. As price is pulling back, it's a simple scenario. You pick up your trend line and mark it out like this. What do you want to see? This is a combination of a price action. You want to see price break out of your trend line. Okay, and True to it, price break out of the trend line. Secondly, you want to pay attention to your commodity channel index. The conditions are, it is either your commodity channel index is at the level of 10 and 20 and then it crossed the level of 20 trying to go up, or let it be at the level of 50 and let it cross 50 trying to go up, because this is a retracement. It can either be 50% retracement or a total retracement of 100% when it comes to the level of 20 and 10. And exactly this is what plays out. And again, price pushed to the upside. Price is now pulling back again. What do you want to do? You put another of your trend line. Price is still above the middle Bollinger Band. So you are not concerned about looking for opportunity to sell. You are looking for opportunity to buy. And when you look at this carefully, look at our commodity channel index that I just explained now. This time around, commodity channel index is at the level of 10 and 20. This is 100% retracement. You connect your trend line. You wait for price to break out of it. You see it. So price break out of your trend line, one confirmation. Price as well closes above your moving average 25 and 10. And then through to it, you make your entry. Your stop loss is simply here. Your entry is here. You can see how this plays out. It was a massive trade here. You see this plays out beautifully all the way to this level. And afterwards, even imagine this one here. As little as it is, price pull back, this pull to 50, it cross, you make your entry. Again, here we have another one. Look at this. And then look at this. Here we have a case of a typical divergence. This is divergence and this is it. So at least you can have your entry here. Price take away this high, you exit. Then it pulls back again. When this pull back, look at it again, divergence. Look at this. Price break out of it, you make your entry, and then you see how this plays out. So this is how you go about trading this. This is crash 500, right? Okay, price came from the lower Bollinger Band. You can see that price has been bearish over time. And then price came from the lower Bollinger Band. Remember I told you that anytime price want to change direction, it break here. But we don't have, when it break it went, right? We said for us to validate that we are already in an uptrend. We want price to cross here, let it retest. But when price came back, it did not retest here. What happened? Price came back, break through it, and unfortunately it went back. Look, I gave us a retest and continue this sell. So this thing is something that you can get yourself familiar with, and you can see I keep playing out. But look at here now. For us to establish our uptrend, this is what I've been saying exactly. Can you see this? Price now break out of it. Look at what happened. Price retest it with the moving average, and then it pushed to the upside. So this is a chart pattern. This is a bullish flag pattern, and it's a continuation chart pattern. So we have this. The same strategy. Look at our commodity channel index, and beautifully we're even having a divergence. Can you see that? And then you see that move to the upside. Again, price pull back to it. It crosses above 50. Since it did not get to that level of 10 and 20, you make your entry. Look at your stop loss. look at your entry. You see that move to the upside, and then finally this and this. So this is exactly how you can take advantage of this, and I believe you have learned something new. Do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video.